right, what's going on, guys? Good morning, good morning. Do, 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 do. Let me know if the audio is okay, if you guys can hear me all right, and then we'll get straight into it. I mean, a beautiful, beautiful trade on NQ. And I know a lot of you guys are not going to trade the overnight session, but for me, if I see a higher time frame potential play and I see the market is heading at a potential resistance, I'm always going to, at the very, not always, but sometimes I will try to stay up if possible. All right. Love to see that, man. And to be fair, you don't have to hold the full move. Like, in my personal opinion, this could have been a trade in itself right there, right? So we have that 15-minute fair value gap right there, right? The market goes into that area above the midnight open. And then from there, we start to reject, clear out the liquidity, and we tackle this prior high in here, right? That could have been your first objective, and you just take a trade from here down to here, right? And again, to be fair, I did not hold the whole thing on full size because I ended up taking some profit before bed and then just letting the rest run down to these rejection blocks in here. And again, this is why everyone always wants to target equal lows and stuff like that. Once the market hits big rejection block areas like this, right, I am going to get out of the trade. I'm not going to be the person who's going to hold for these lows because especially in this type of market environment where the market is consolidating a lot, you're typically going to have the market sweep these bodies like this, and then we have a reaction. Same thing that we have over here, right? And this is why I preach to you guys, do not fall in love with equal lows and equal highs as targets. The rejection block, which is the bodies of the candles, are a much better target because once the market sweeps that, we might not take out the lows and then we might have a reaction. So, yeah. But again, for anyone who caught the short, good job. You did have to stay up a little bit overnight session to catch this, but for me, I was willing to go ahead and stay up a bit for that. So you're still no, I am in no positions. Like this was again, I said I want to see 24 920s, right? And then we got 24 920s right here. Where's the price label? If I can find it. Yeah, right here. 24 920s was my target, and that's exactly where I just ended up being out. Now, I do think that we might have a fade off down into these lows in the fair value gap that's resting here, to be honest. But as you guys know, I usually do not trade the CPI news event. Like I'll trade after the news event, of course. Like I'm not, because some people they say they won't trade the whole day. I don't see why not. I think it's best to just avoid the news. I do think maybe we possibly sweep these, come into this fair value gap a bit, and then we'll see from there. But I'll be honest, I'm not going to take any position ahead of CPI because of potential slippage and the volatility. No, man. Like, trust me. Yeah, it's funny because that's exactly why I've been especially the last 2 weeks, because I've been going after so much evals and funding with Tradeify, TopStep, Lucid, and once I get a certain amount funded across those firms first, right? Then I'm gonna go into like doing the whole Apex 20 accounts, but I want to get at least 10 to 15 accounts from other firms in total, and then go for the 20 Apex. But again, man, but again, having like my first child in a few months, God willing, like to me, bro, like that is I already know it's gonna be a lot of work. I have friends who have kids. I have my cousin, both of them have kids. Like, and I just want to make sure that I create systems and strategies like I talked to you guys about in the video yesterday, where I can show up at the same time every single day, and I know exactly what I'm looking for, you know. But trust me, man, like I'm still gonna be trading. I'm still gonna be making content. If anything, I'll probably make even more content um, with the child on the way. So, nah. Well, actually, let me actually talk about it too, of like what I've been kind of like doing and stuff like that, and give you guys kind of a preset before I start to make like YouTube videos on it. But pretty much, right? Like we know that there's going to be volatility every single day from 7 a.m. I'm sorry, no, 9 a.m. Okay, let me just put the text box here. So every single day, we know that the New York Open, there's going to be, so like this is the 3 sessions I've been focusing on recently, right? Asia session, and I've already told you guys, Asia session, I usually have been trading a lot more. This will be from 7 to 9 a.m. You'll usually have, I'm sorry, p.m. And these are all going to be Eastern time, right? Then we have the a.m. session. Now, most people, they'll trade the market open at 9:30. Again, I'm not talking about anyone else. For me, I do not like trading the New York Open at 9:30 because I think it's a lot more risky. Because during the first 30 minutes of the day, right, from 9:30 to 10 o'clock, you're typically going to have some sort of whipsaw price action. And what I like to do is I like to wait for this type of whipsaw price action to be done. Now, after the first 30 minutes, and this is why the first 30 minutes, in my opinion, is best to wait till 10 a.m. because I don't trade the New York Open until 10 a.m. EST. Very rarely, like, well, I enter like before 10 a.m. Like if I see something that's setting up at like 9:55, but it's pretty much at like close to 10 o'clock. The reason being is because I want to avoid this price action. I want to let the first 30 minutes of the day play out because there's a statistic that I'm going to talk about in a later video. I'm not going to talk about it now. There's a data point that in the first 30 minutes, the potential high or low for the AM session, or at the very least, going into the 12 o'clock hour, will set the stage for the next leg lower on the next 30-minute candle. So again, without getting too in depth on it, it pretty much, I'm waiting for the first 30 minutes to play out, right? Let all the chop happen, and then there's going to be some sort of directional move that we can take advantage of. So that's what I've been focusing on. Also, at the 10 a.m. candle, what happens? You have two major components of the 10 a.m. candle, right? And I'm going to talk about the trade that I took yesterday, right? We have the 1 hour candle that closes from 9 o'clock to 10 o'clock, right? Which is this candle right here. Let me do this. Right? We have this 1 hour candle that forms, and we have the next candle open for 4 o'clock. So that gives me a potential trade opportunity. Now, whenever I see something like this, right? Like let's say we have a swing high down to swing low, and then I see a 1 hour EBP, or I see some sort of like 1 hour confirmation, like maybe I get a strong candle closure, like a bullish candle like this, right? And I can anticipate the next 1 hour candle. I will then usually go down to the 5 minute time frame, look for breakers, look for any confirmation setup, and then I'll just take that. And over here, look what we have. We have that breakdown below. The market takes out the swing low with that 1 hour EBP, and we form a fair value gap. Beautiful entry, and then you could just target again the bodies of the next leg lower. So obviously this is the swing low, so you know me, I like to target the bodies of the candle, right? And boom, in and out. And these types of trades, you'll see them very, very often during the market open, close to 10 o'clock, close to 11 o'clock, and 12 o'clock. And then if I don't see anything in the AM session, right, this actually doesn't matter, because then you still have, and let me just put the 10 a.m. 12 a.m. EST, well, 12 p.m. EST. Now, to be fair, I don't usually stay until 12. It's usually 10 to 11. I'll be able to find a quick intraday move. And that is the beautiful thing about trading that 1 hour time window, because you will usually see, you might be able to anticipate the next 4 hour like little move like this, or whatever the case may be. Now, if that's not enough, the PM session from 1 to 3 p.m. EST, 2 p.m. ideal. 2 p.m. is going to be the next 4 hour candle, right? Because again, I'm trying to anticipate, like the same way that I've shown you guys like on NQ on the weekly time frame, right? On how we were looking for those potential sells on the higher time frame, right? Like remember how we were, again, for like NQ and ES, we were looking for that downside move in here on the daily time frame, right? We got down and stuff like that. It's hard to kind of see it based off this daily time frame, but for the longest we were anticipate this potential monthly candle to come down into this high and then flip bearish at one point into a key level. Right now, if I could do the same thing on a 4 hour candle or a 1 hour candle, right, the ranges are going to be smaller, but it's the same principle. And that's all I'm trying to do, is anticipate potential 4 hour bars or 1 hour candles going into like the next candle, right? So the PM session is going to be 1 to 3 p.m. EST. So then that gives me another potential opportunity. So I have 3 opportunities every single day to at least anticipate either one 4 hour candle or one 1 hour bar. Now, again, the reason why I was always so kind of against trying to anticipate like a candle, like a 1 hour candle, was because the move is fairly limited, right? It's not going to be as big as a 4 hour candle typically, and it's not going to be obviously like a daily bar. But one thing that, again, like because again, I came from the CFD background. So if you're trying to do this with like a Forex pair with high spreads and high commissions, you can't really scalp, or you can't really look for quick intraday volatility, right? With indices, that's not the case at all, because you can catch scalps all day long, because small moves like, 10, 20, 30 point moves on NQ, you don't have to deal with you don't have to deal with any spread really. And then you also don't have to deal with a high commissions compared to FX. And plus, on the intraday basis, this just moves more. Like again, you look at during the Asia session. Asia session, we had a nice little move up, and then we ran up into that 1 hour fair value gap, right? Like if we go down to the 1 hour time frame, right? Look what happens here. We have a nice push up. Price respects this order block. We can anticipate this next 1 hour candle to come to over here into this fair value gap. This is then all I'm trying to do is the same way if this was a daily bar. I'm just trying to like time this potential bottom wick to have that expansion move up, as long as again variables are in place. So again, let's just say CPI as an example. Like let's just say, let me try to find a good example. Well, yeah, I just kind of went over like the prior examples, but that's pretty much what I'm trying to do on an intraday basis. Is there a potential for me to anticipate a 4 hour candle or a 1 hour candle? And if so, and again, when you have all these time windows, you're almost guaranteed to find at least one solid trade every single day. Like for example, look at this 1 hour EBP right here, right? And mind you, this was the play that I was talking to you guys about in the PM session, going into the PM session, right? This is 12 o'clock candle going into 1 o'clock, right? PM session, we just said, is 1 to 3. Now I can look to anticipate this bottom wick, and we had this upside target that I sent to you guys in the Telegram group, right? Around 25,200s. This right here, you get that 1 hour bar. You can then look for this next candle open, price to come down into some sort of support, and then have that push up into that level. So again, when I'm looking at every single 1 hour, or let's say even this 1 hour bar, look at how this 1 hour bar creates something called a pin bar, right? Where we sweep liquidity over here, and we have this downside fair value gap. Now this is a counter trend, but even then you could still look for a potential short down into this fair value gap if you wanted to play the retracement. Again, a little bit more risky because you are playing a reversal type of play, but this is also another 1 hour candle that you could potentially anticipate. So that's pretty much what I've been doing, honestly. It's just focusing on these types of plays where I can anticipate the next 1 hour candle with context, right? I'm not pattern trading, because we were already bullish on this one yesterday, and I sent it in the chat as well. 225-200, right? So if I see a bullish 1 hour bar inside of overall bullish structure at a key level, guess what? This now gives me the opportunity to play this next 1 hour EVP to that next resistance point. But yeah, so those are pretty much intraday plays that I'm utilizing. And then obviously I'm still gonna have my higher time frame plays. Like for me last night, this was more of a higher time frame play. I would even call it like too crazy of a higher time frame, but I just thought we would potentially have a drop lower based off this 1 hour structure. And also we have multiple liquidity pool sweeps, right? Like we have multiple highs being swept with liquidity beneath, and we broke down here. I want to see this fair value gap being respected, which it was, and then yeah, down off to the downside. So we'll see what happens on CPI in about 15 minutes. Let me go through the comment section. Sorry about that. I mean, gold was also one of those ones that we talked about at the beginning of the week, right? Where I wanted to see us come into this fair value gap, which we finally did after a big drop at the open. I'm not gonna lie, I did not expect that drop at the open. I thought we would maybe gap up in there, but we never did. And we immediately sold off to take out liquidity. Now, that's the thing. Anytime you have the new week opening, sometimes the market will have a run on stops. To be honest, I really did not think we were going to have this big of a drop. But the moment the market flips bullish, the higher time frame level still is still in play. And we did not flip bullish until this 4 hour bar right here, where the market has the open, price pushes down to this order block, and then we have a close above the fair value gap. And now we can start to look for potential buys on any dip opportunities with a stop loss below or at the line in the sand of this candle bar right here, right? Which then you could look for entries, whatever the case may be, into that fair value gap. Now, I will be honest, I am not sure. I do not like trading gold, if I'm being honest with you guys. I feel like on an intraday, like don't get me wrong, if there's a daily play or a 4 hour setup, then yes, I think it's really good. But man, like on the intraday basis, like if you go to the 15-minute time frame and stuff like that, like bro, you're better off, in my opinion, trading NQ. Because even when NQ is not bearish and stuff like that, I'm sorry, when NQ is in consolidation, it's not even as choppy as this. I think gold is not that good unless you have a clear daily and 4-hour bias. I kind of consider it like very similar to FX, where I don't like trading FX on a higher time unless it's a higher time frame basis. Same thing honestly with gold. But right now I'm neutral on gold because the objective already got hit. Nice, man. Hope you guys glad that some of you guys caught that trade from last night. And I know again some people are gonna be sleeping, especially if you're here in the States, or even in the UK. I think 12 o'clock in the UK is, well, maybe like in the UK, maybe if you were up early. I think it's 6-hour time difference. But yeah, again, for me personally, if I know that the market, like in Asia session, I saw that the market was already sitting at this fair value gap. I knew that, okay, if this is gonna work, this is gonna work around midnight, right? So 12 o'clock Eastern time, 12 a.m. Eastern time at midnight, I'm gonna look for that potential move up. I mean, I'm gonna look for that potential move that I'm looking for, potentially going into London. Now, if I didn't see any setup, and again, the setup was very simple for me. The setup, okay, so you guys already know the context. Now, what was the entry, right? Right at 12 o'clock. Okay, so right at 12 o'clock, midnight, because again, if I'm going to take a position on a potential trade, like if I'm bearish, I am not going to take a trade unless we're past midnight, right? Unless I'm in Asia session. But the Asia session for me, I've told you guys, 7 to 9 o'clock. If I'm in a trade during this, like let's say if I was like short over here or something like that, I am going to close that position out by, if we have not moved in my favor, by like around 11 o'clock Eastern time, right? PM. Now, I didn't really take the short in here anyways because I wanted to wait for like midnight because I saw this fair value gap on the 15-minute time frame. So look what happens. We have a big push up. The market comes into there. The moment that this happens, right around like midnight, which is like around here, midnight price was like right there. I pretty much just went short. I put a little bit of a wide stop like right here, right? How many points was that? 24, 110 to like, yeah, about like a 40-point stop again. And I know that my first objective was going to be down here. Plus, the reason why I like this as well is because I'm like, all right, right now, even if let's say we don't make a lower low when the market is looking like this, what do we have here? If you guys were in the Trade Academy before, this is like one thing that I always talk about. Market comes up into a key level, and what do we have? A bunch of trendline liquidity with a fair value gap beneath it at a prior high point, right? So at the very least, if we're going to even have a reaction during the London session for manipulation, even if I'm wrong on the bias, there's a potential that we might take out liquidity first and then have a push higher if I'm wrong on the bias, right? So I took the entry there, and then the moment I saw this, right, where we inverted this fair value gap, which is essentially one of my confirmations, right? This next candle opens, I took another position right there, and then my average was no, I'm sorry. The next position was something around here. Once we completely inverted that, and then I did miss this retest, and then the average price point was something around here, and then again off to the races. There was another little bit of a retest on this candle right here where we retested this prior low, which is a breaker. So if we see, this could have also been another potential entry, right? Where we map out the breaker, swing high, swing low, the market pushes up. This is going to be our next area of resistance. Right, this candle broke structure, so our stop loss on any retest would be above the candle that broke market structure. I learned this from Tom Dante. It's called a thrust bar. And then, because some people say we put the stop loss all the way up here. In my opinion, there's no need, because if we come all the way back up in there, can it wick up in here and then trade lower? Yeah, but like you want to see this continued momentum whenever you're in potential sells, especially when there's a key objective that has not been traded yet, right? So this retest would have been fine in my opinion as well as another confirmation. So if you missed this and you waited for a market structure break, you got it. So imagine you were able to take the inversion and then take another retest on this one. You could add, that's another way to potentially add. Now I only add positions as long as my first objective does not get hit, right? Because on this candle closure, when we retest, we still have these equal lows, we still have this prior high, and we still have this fair value gap, and the market trades right into that. So that could have been another potential entry, but this one didn't happen until like almost 1 a.m. So Eastern time. So again, depending on your time zone, then yeah. Then over here, this is something I would not usually add on, right? Because we already hit this objective. Because if I already have positions here, if I have positions there, I don't want to risk Like if I'm wrong on the bias where the market starts to rip higher, even though obviously this one worked, but this is something I would not add because a lot of people ask me like when I add to positions, when do I kind of like not add? Because I'm a fan of like adding to positions if, again, my first objective is not hit yet. The moment we hit that area, I'm not going to add any more positions. Doesn't mean I'm not going to hold the position, but I'm just not going to add to my position because I don't want to ruin my average. In the event that we do get some sort of like spike up, you know what I mean? I don't want to like have a bad average at a potential support. So yeah. So if you guys are asking where like what my bias is for today on NQ, right now I'm gonna wait until the open, to be honest, because I mean look at the so this is another thing, right? When I don't have a clear daily bias and the market is clearly just consolidating on a daily time frame, I do not look at this anymore. I only look at 4 hour and 1 hour bias. So whenever, because again, higher time frame bias is not going to always be clean, and let's be honest, NQ has not been clean on a daily perspective, right? Even being able to still like identify that down move, look at that. There's no continued momentum at all. So the candles are not like when I don't have a daily bias, I just go into the session open minded with waiting for, hey, let me see the 4 hour bars and let me see the 1 hour candles, right? So as of right now, if I had like okay, if I had to kind of like anticipate what's going to happen during CPI, I do think we possibly take out this low. And what will be interesting is if we sweep this low, what happens going into the New York Open, right? Do we actually reject off of this and have some sort of strong bullish momentum? Because if that's the case, then my eyes go here, right? But again, this is the problem. Sometimes when you come into a specific day with a bias in mind and you get married to that bias, or like let's say I tell myself, oh yeah, the market will probably come down here and then we're going to go up here, right? You already kind of put it in your mind that you're looking for something very specific. I don't know what's going to happen on CPI, so there's no point of anticipating it. Yeah, but if I had to kind of like guess, it would probably come down and sweep these lows. Let me see ES. Yeah, ES still has that fair value gap that's also present. YM, I mean, we kind of traded into that fair value gap, but yeah. But pretty much, yeah. If I had to like, I'm thinking that this 4 hour candle, right? Look at the 4 hour candle. Is this going to be the top wick that forms, right, at this order block, at resistance to send the market lower down into this fair value gap? I think so. But again, we're already below Asia low and we're inside of an overall consolidation from Tuesday, and we have CPI. So it's not a trade. Obviously, you don't want to like a risk because this can easily just spike up, like, easily go like 200 points either way. Yeah, 8 minutes until news. But yeah, your style is good for having a kid, but it changes a lot. Expect way more stress. Yeah, and that's exactly why. Like, bro, like now, if I showed you guys how many evals I've passed in the past week and a half, like I've created a full system now where all I do is I show up at like 9:50 on in front of the charts. I'm only up early today because of CPI. I just want to just like chop it up with you guys as well. I wake up at 9. I'm sorry. I get to my desk at 9:50. From 9:50, I'm usually done with my trading sessions by 10:20, 10:30 now, and that's it. Now, last night was obviously a anomaly. I'm usually not going to stay up overnight, but I really like this play, man, because I like when I see, like liquidity, like it's called the three Indians pattern when you have the three highs in a row, and you get consistent like rejections, and then you leave liquidity to the downside. I really love this framework, so that's the only reason why I stayed up a little bit for this. But outside of that, I'm usually just trading that time window, and I'll also trade Asia session as well. And then PM session, I have it in my back pocket. But to be honest, if I already made my money from Asia in the AM session, I'm usually not going to trade the PM session. I'm just going to just go about my day. So yeah, man, it's all about having systems at the end of the day. No, I am not bullish. Well, again, I could be bullish if we come down to this fair value gap. If we sweep everything in here, and then maybe during 10 a.m., like the next 4 hour candle is going to show me some potential like bullish price action, then my eyes will go here. But there's no reason to anticipate that just yet. Yeah, I already talked about gold, guys, a little bit. So yeah. In my opinion, like the gold is just not clean. I don't know why people trade this, to be honest. I think it was good. You know what it is? On the obviously on the volatile move up, it was nice. But on an intraday basis, it's actually not really clean at all. It's the way I treat it is the same way I treat crypto, the same way I treat FX. The only thing that I'm scalping or intraday trading is NQ and ES. Those are the most clean on an intraday perspective. Everything else, like I would require a daily bias minimum, daily, weekly, and 4 hour. NQ you can get away with a 1 hour bias and stuff like that. Um, yeah. So again, the 1 hour, if you're talking about these equal lows, there's a chance that we could just sweep them on this 4 hour candle, and we just created the top wick, right? So this candle right here opened up at 6 o'clock. So 6 o'clock open is right here. This whole push up right here on the 1 hour time frame could have been manipulation to drop lower, to sweep. Now we do have CPI. So again, we've already swept all this 4 hour rejection block. What is a rejection block? It's just the bodies of the candle. So this could be enough for the market to go higher, right? But again, that's why with CPI, like I'll say this, I would be bearish on this if we didn't have CPI. Like on this 1 hour with pretty much anticipating as long as we maintain even then no, I don't like the fact that we're trading at this 15-minute order block, but this entry right here would have been nice. You see how this one at 15-minute bar, this 15-minute candle inverted this would have been a nice little move from here down to maybe this order block in here, right? That little potential move right there, that's like 30 points. But like right now it's just like too risky. But if I had to guess and I had to say like give it like one-sided bias, I think we might sweep all these lows going into the session. But it's just risky because we also have a bunch of equal highs as well. Now the only time I start to like look at these equal highs is unless we start to have some sort of like 4 hour bullish structure or 4 hour confirmation, like a bullish confirmation. Like for example, this 4 hour bar, imagine we close all the way up here and then the 10 a.m. open is going to be a 4 hour EBP, right? Then I can start to look at, okay, well, you know what? There's a rejection block up here at 25 170s. There's potential liquidity at 25 260s. You know, this is how I frame my biases. So I don't come into a specific day like dead set on a bias unless there's a higher time frame play. If the daily chart looks like this, I'm going to go into the day looking at, hey, what can I anticipate a 4 hour candle? Can I anticipate a 1 hour candle? And if not, then I don't find an opportunity. But typically now, if you're looking for at least 1 hour candle, you can still get you can still scalp those 20 to 30 points, and you could find yourself a setup, especially after the 9:30 open. I've been trading this 1 hour and 5 minute entry criteria you're talking about for the last 3 months, and last month took 2 Apex evals and passed both in 15 sessions. First hour of London and New York Open only. I get 18 opportunities a week, but not everyone's a tradable event, as a confirmation doesn't happen. Yeah, and that's another thing. Like I'm glad that you brought that up because that's another factor about like anticipating 1 hour candles. Are the moves smaller, right? Like again, before I used to not like to take these types of moves, right? Where I have a 1 hour EBP with context. Remember, guys, we're not pattern traders. With context, the thing is, you get so many opportunities, man. You get way more opportunities. You can get like 2 to 3 opportunities in the New York Open, but are they going to be like these types of opportunities like last night? No. But I've came to grips with that. And I think that was the most important change as well, is understanding like, yo, if you're gonna take these 1 hour plays, you can't be married to a target. Like imagine if I was short here and I was like, oh, I want to look for maybe these rejection blocks, or I want to look for that 4 hour fair value gap or whatever, right? I would have got smoked. So like that's the one thing that I do realize when it comes to the higher time with these 1 hour and 5 minute entries, the TP, in my opinion, has to be quicker unless. But this is a beautiful part. If you get a 1 hour confirmation and a 5 minute entry, and you have a nice daily bias and 4 hour bias, bro, the risk to reward is absolutely insane. You can get 7R on indices very easily on a trend day. It's just NQ hasn't been the cleanest on the daily time frame, but I'm telling you guys, it's gonna break out of this range at some point. Whenever there's a clean daily move with a 1 hour confirmation and a 5 minute entry, you can turn that scalp into a potential huge, massive intraday play. All right, so we have 1 minute to go. Let's see what happens. It'll be interesting to see. I wonder if it's gonna be like. Let me look at the economic calendar. Also on Twitter. So let's see what happens. Let me go down to the 15-minute time frame, and we'll see how this 4-hour candle prints. I'm not going to be on here too long after the news event, guys, because again, I'm going to wait for the 10 a.m. open. Plus, I have a couple emails I have to respond to for. So let's see what happens. 5 seconds to go. Okay, we get that rip. A little bit uneventful. Usually it's a little bit better. Usually get like much bigger moves than that. I mean, that's still what, like 24, let's say 25s to about 60-point quick spike. What's going to be interesting though is if this was just a run on stops, this 1 hour fair value gap to then take out the liquidity down here, because this 4-hour candle still. Because look at ES. ES did not take out that 4-hour high, right? So this could have been a little bit of manipulation on NQ. But let's see. Please show your candle settings. He's talking about like the color scheme. It's this. But yeah. What do I think about? Yeah, so CPI, really not much action going on. Probably a stop hunt to take out the liquidity down here with some sort of SMT. Let's go down to the 1 minute. Yeah, it's just hard to get on, like, just hard to kind of dictate based off of like one wick like this. And then ES to see ES, yes, didn't take out its high. But yeah. Oh yeah, my bad. Let me go to Euro. This was actually a nice 4-hour. Well, there's two nice 4-hour EBPs. We have one right here. Market retraced back into the order block, and we rejected, created another 4-hour. And then this next candle opened, took out the lower low. This is actually like nice, where you get that swing low, swing high. The market comes back in. We form a EBP that confirms as our lower high point, lower low as your potential target, and that's what happens on this next 4-hour bar. Now, I think if the short is like maybe a little bit too late, let me go to the daily time frame. Yeah, I think the short might be a little bit too late, because now you're contending with potential support at these levels. That doesn't mean this can't be a complete fade, but I like to get in on these short positions like around these points in here, even like at least the opening of this 4-hour candle to anticipate the move lower. But yeah, see, it'll be interesting to see if this 4-hour candle flips. Yep, because again, if we look at ES, like we talked about, like real quick, it didn't take out its high. And then typically if there's going to be some sort of SMT, there's usually some sort of displacement with some fair value gaps and stuff like that as well. And then these candles usually flip bearish. Still another 1.5 hours on this candle, down to these the liquidity over here. Do you have an opinion on BTC? To be honest, I'm gonna pull it up on my other screen while we watch NQ. Yeah, NQ is flipped. Even the 1-hour candle starting to flip as well. But still 25 minutes on that candle as well. Let me go to BTC. I'll be honest, I've talked about this before. I'm looking at it on my other screen. There's a weekly fair value gap that we're kind of trading into. So like, I'll say this. I know like some people are like a little bit bullish on this. I've seen. I still think that BTC could potentially head down to 58,000, to be honest. That's kind of like my around my price point. I think near term we might head down to 58K before any significant pullback. Now again, I don't really day trade BTC at all. I just because it's way too choppy to day trade for me personally. And there's much better things to trade, so there's no need. But yeah, yes, almost completely flipped. Let me just put an alert here because whenever if ES like hits that area first, then that's something to be considering. Potential SMT down there. But yeah, I was looking at CAD JPY buy on yesterday's daily close, but the final 4 hour candle pulled me off. It went up though. Can you take a look? Thanks. Yeah, let me pull up on my other screen just to see as we're watching this NQ. Yeah, ES and NQ. ES is already almost at this fair value gap. Let me actually sync this in here, which would be pretty much yesterday's low. The thing is this, right? This is why it's important to have targets as well, because if this comes down to this daily low, is this going to be a topping formation? I don't know. But like, because people ask me this, like, what happens when we sweep? Is this going to be a sweep and then push up? It's like, there's no need to look for this unless the daily time frame is bullish, right? Like on a daily time frame, we're not really bullish at all. If anything, I could argue this looks more bearish because we have a pin bar candle in here at this volume imbalance. So I could argue that this actually could this is still bearish structure, right? But because we've been in such a big consolidation, I would not look for some sort of like buy like that until the market shows me that there's strength at this area. The problem is so many people, they want to like, oh yeah, once the market sweeps a low, we're ready for buys. Not really. You can target that area, but like looking for a reversal off that area, I only look for a reversal if the higher time frame permits. Let me see CAD JPY real quick for you. He was looking by yesterday's daily candle close, and then the 4 hour put you off. But what about the 4 hour put you off though? Because this is actually beautiful daily time frame. I mean, this is a clear trend, right? We're having swing highs and swing lows. We have a beautiful daily EBP that closes right here after hitting a daily fair value gap. Now, all you're looking for is the next candle open. You want to look for that bottom wick. And you even got a 1 hour EBP right in the Asia session as well, which could have taken the EBP high right there. Right, so that's Tuesday's high, which is the EBP candle bars high. You have a 1 hour EBP that forms at this breaker point inside of the Asia session kill zone. Next candle pushes up, beautiful. And I think there's even a 4 hour. Now again, if you're looking for a potential long now, I think it's more risky because now we're kind of contending between this swing high down to this swing low. So now we're kind of like getting into a little bit of a premium. I don't like entries like this, but the entry over here, 100% valid at the 1 hour time frame. What time do you trade New York time? I usually get to trade around 9:55. So I avoid the open. Like I don't even look at the open anymore. Now, obviously today is just different because of CPI. So I'm just gonna like obviously I just want to watch it with you guys, talk about what I think is gonna happen and stuff like that. But usually most days now I come to the charts right before 10 a.m. So I'll give myself like 5 to 10 minutes, come around 9:50, 9:55, and I'm looking for a very specific criteria in price. Can I anticipate the next 4 hour candle at 10 a.m. or can I anticipate like an hourly bar with context and variables? Thanks so much. I'm waiting for my first pound. Thank you for your strategy, TTPP. Finally, I'm profitable. Love to see it, Michael, man. Appreciate that, bro. I know a lot of you guys say like thank me and stuff like that, but the reality is this. If you guys get payouts and stuff like that, at the end of the day, like getting a payout is an accomplishment that you guys have achieved, right? It's kind of about this Joe Rogan saying that like, people like to take credit for stuff. But if you take credit for other people, you also have to take I don't want to butcher the quote. What does he say? He said, like, if you take credit for other people's success, you also have to take credit for other people's failures. So I appreciate the things, guys. But at the end of the day, if you guys get a payout and you guys are able to use some of the stuff I teach, again, like it's not like stuff that I've invented. I've gotten it from other mentors as well. Um, but yeah, then I'm super glad that it can help you in any way, man. And give you guys self credit because at the end of the day, like you could teach a bunch of people the same strategies. Someone has to go in there, and to get a payout, you have to consistently execute for a certain amount of time, and that's the hard part, right? So anyone who's like doing that, like big shout out to you guys because trading, as simple as it can be, it's a mental warfare. Like in my opinion, trading itself, like learning how to trade, identifying bias, identifying what's a valid entry, these things are easy, bro. But the hard part is like being consistent. It's kind of like the gym, right? Everyone like, bro, to get lean, like to get a good solid physique is not hard, right? You just have to hit the gym, eat certain foods, and that's it, right? But why is it so hard, and why isn't so many people more ripped? It's because like you have to be consistent, and that's the hard part. It's the same thing with trading. Trading is not that hard, but the hard part is being consistent on a daily basis, on a weekly basis, every single day. Um, I use Ingolf as potential directional bias only. Yeah, to be honest, that's kind of like my favorite way to use it as well in terms of directional bias, especially if it's like a 4 hour candle or a 1 hour bar. Um, Rarely do I use it for a confirmation entry because typically, like the risk reward is not going to be as great. Now, I will say this: on the 15-minute time frame with context, you could use these as like entry triggers. Like if you want to go ahead and like start like kind of like back test it and see if that can help as well in terms of like maybe getting even better entries on a 15-minute time frame, like something, or even on a 5-minute time frame with context, obviously, you can actually use these as like pretty good triggers, especially if it's like with the inverse fair value gap or something like that. 6 p.m., 1 hour. No, I personally wouldn't trade that because that's the session rollover, right? Now, if you're talking about from 6 p.m. to 7 p.m., then yes. But if you're talking about from 5 p.m. to 6 p.m., no, I wouldn't trade that because you have that rollover spread. Now, futures, if you're talking about futures, right? If you're talking about from 6 p.m. to 7 p.m., because futures is closed from 5 to 6, then yeah, it's still valid. Okay. Um, no, unfortunately, I'm about to get off soon just because I have a couple of things I got to get done for the morning. Have a couple clients I have to respond to by email. My bad, guys. Just looking at an email real quick they got this morning. Okay, yeah, my bad, guys. Reading an email real quick. Um, but yeah, no. But again, as always, like if I ever see updates, I'll send them to you guys inside of the Telegram. Like yesterday, right? We were looking at those longs to that 12. Like this. What was it? That was on the 1 hour time frame. Right, like we were looking for. I said like once we close as a 1 hour EVP, I said I want to see the price go back up into here. Buy is going into the New York into the PM session. So I'll usually just post that and stuff like that. So yeah, I gotta give it to people who stream like for like hours, bro, because it's very time consuming. So I'm actually in the process of doing this right now, right? And let me just like kind of walk through price action real quick. So you see how right now we have that 1 minute that respected this 5 minute order block, right? Realistically speaking, you would not want to now, you would want to see this kind of respect and you want to see a price head down to that fair value gap pretty aggressively. Now, the whole key point, as long as ES doesn't hit that fair value gap first, which it looks like it might to be fair, but yeah. You would want to see this bearish structure on the 1 minute and the 5 minute continuously respect because it's the same concept as if like let's just say you're anticipating a move down, right? If I'm anticipating a move down on an hourly on a daily time frame, I want my 4 hour and 1 hour structure to be bearish. It's the same thing on these types of time frames. You want to see, and you have a 5-minute EBP that's forming, so you ideally want these structures to kind of keep in play. But my bad. Going back to what you're saying, if someone wants to scale on futures prop firm, what correct way would you recommend? I'm a huge advocate in terms of prop firms that you do about this approach, right? So let's just say number one, you have to pick a goal. What's your goal, right? Is your goal like, let's say, $10,000 a month? Because then we can reverse engineer this. If your goal is 10K a month, the reality is you're going to need conservatively at least 10 funded accounts on the future side. Right now, if you have CFDs, you don't need as much on the CFD side. But let's just say again, because you asked about futures prop firms, we're going to stick with that. Because at the end of the day, if you have 10 accounts and you can get $1,000 per month on each account on average, right? You are going to have that $10,000 a month. So number one, you have to identify what's your goal. And then you have to identify how many accounts do you need to realistically hit that target. Now, can you have 5 funded accounts and get $2,000 payouts every month? That's also very, very possible as well. But I like to use extreme low end objectives, extreme low end. Now, this is what I always say. If you don't have any funded accounts right now, what you want to do, and look at this as I'm talking about it right here, this is what I mean. You see how that next 5-minute candle opens up? We create a top wick and now we're heading lower, right? This is exactly what I'm kind of referring to in terms of like the market holding this overall bearish structure. And that little move right there was what, like 10 points, 20 points? But sorry, I got a little bit sidetracked. But essentially, this is the thing. What you want to do is you have no funded accounts. You want to get at least a few funded accounts. Once you get, like, let's just say maybe anywhere between 2 to 3 funded accounts, get payouts first. Once you get payouts, like say, even if you get like a $2,000 payouts, right? Then what happens is you're risk free, because if you're able to cover the cost of your evaluations, you want to then use this money to start scaling up. So don't be the person, if you haven't gotten a payout yet, or you haven't gotten funded, you want to make sure that you're focusing on only getting at least 2 to 3 accounts. Then focus on getting payouts. Do not do this. A lot of people do this. In my opinion, it's a distraction. Whoops. Right? What happens is most people, they'll get like a funded account, right? And then they'll try to trade a bunch of evals while they're trading the funded account. And I've noticed, again, obviously I'm not saying like no one can do this, but most people, for whatever reason, when they're trading a funded and an eval at the same time, for some reason they cannot focus. And then they start to lose, they start to go and draw down on the funded, which then gets them on tilt. Then they start fucking up the eval. Keep them separate. Trade the funded on a separate day, trade the eval on a separate day, right? However, once you get funded, what you want to do, in my opinion, instead of buying more evals, get payouts first. Get at least, $2,000, $1,000, whatever the amount is. Once you get to that point, now you can fund more evals, focus trading those evals, and now you're in a position where you can get more funded accounts without risking your own money. You want to get to that break-even point with funded accounts, especially with futures, because bro, futures firms are so cheap. So you can buy 10 accounts for $1,000, right? Even if you have a $500 budget, right? Again, depending on what type of accounts you buy, 25K accounts or the 50K accounts, you can buy at least 5 to like 7. So if you're able to do that, man, like that's amazing. Then again, this is what I always preach. Do not trade these accounts all under one copier. I have been doing this for a very long time. I've been trading props for a couple years now. I just don't think it's smart to put all your eggs in one basket. Because the thing about the ROI for props, and the huge edge in props is this. If you have 5 accounts, right? And you are someone who, even if you're someone who's not really profitable, the reality is like this. If you have a 50% win rate, right? So that means, let's just say you have 6 accounts, just to make the math easier, right? So I take 6 trades. I'm going to lose 3. I'm going to win 1. 3 accounts are going to be wins, right? Like 3 accounts with that data are going to be in profit, and the other 3 are going to be in drawdown. So if you are actually distributing trades across different accounts, you're actually having a higher expectancy. So even you could be someone who's not even profitable, you go on tilt, you can still be profitable with the prop firm model. So that's what I always suggest if you want to scale. Don't rush the process, right? Get funded accounts first. Get at least 2 to 3. Use focus on trading those accounts once you get them. And then do not take the same trades on all the accounts. Now, once you get to like 10 accounts, right? Then you can start putting a copier on them. And what you could do is you could have like accounts. You could have three sets, right? So maybe like one set of accounts has like three. The other set of accounts has another three, and then the third set has four, right? That's a total of 10 accounts. Because once you get to like 10, it becomes a lot harder to like, are you going to like distribute the trades across 10 accounts? I mean, listen, if you want to do that, that's perfectly fine. But then it makes more sense. Maybe you do like 5 sets of two, right? Where you have two accounts under a copier and you just combine them. So what I'm doing personally. That's what I've been doing for like with props for a very long time. Get to the point of break even. Do not allow yourself to use a lot of your own money. Oops, sorry about that. Do not allow yourself to use a lot of your own money to get funded or to buy a bunch of evals. Now, obviously, in the beginning, you're gonna have to, but if you want to scale, that's my best way to. That's my best piece of advice for you. I'll be honest, I personally don't use it. I think it's like maybe if you're a position trader, yeah, but like as a day trader, like it does. I don't think it matters. Nah, man, I wasn't ignoring it. It was just I gotta get to it, man. Engulfing bar play. Yeah, Asia session is 7 to 9 p.m. EST. That's my Asia session kill zone. I was just on TikTok live. CPI cooked those on one shot, one kill PS. Excuse me. Yeah. 1 hour EBP on GC looks good for sells. Let me see gold. I just don't like trading gold on 1 hour, man. I don't know what it is. Maybe it's a mental block thing. But like you gotta ask yourself, right? So what's this form? This 1 hour EBP, right? Let's assume it closed. What context is there? You know, like okay, for example, like, what do I mean by context? Do I see a potential target? Actually, I kind of do actually. Yeah, this one's not that bad because you do actually have a bunch of liquidity on these 4 hour time frame lows over here, which is yesterday's. I think yesterday's New York. Well, this is the PM for gold on yesterday. And there's a nice little fair value gap right here on the 4 hour time frame, and it's coming off a daily fair value gap after sweeping high. So I could see the context behind this. I just hate gold. I hate trading gold on an intraday basis. Like I feel like I perform the best on gold when it comes down to 4 hour and daily setups. Okay. Nah, like this is like outside of trading. This is it has to do with insurance. Yeah, exactly. A bunch of liquidity below on that gold. So I definitely, yeah, I could see the framework actually, 100%. Thinking on getting on that 1 minute play on NQ. Yeah, I mean it's a very tight stop loss. Like these types of plays and stuff like that, I usually have very like the RR is just worth it. Especially if the 1 hour candle closes as an EBP, which is likely in 6 minutes. But if you wait for that, then you might miss that fair value gap. And the one thing about this is I realized about the lower time frames is you can take multiple trades a day. And if you take multiple trades a day, you're better off. You give yourself more opportunity for potential winning trades. So let's just say you have a risk of $1,000 per day, as an example, right? If you have $1,000 risk per day, and I know that if I split this up into threes, I can risk $330, right? Let's just say $330 across 3 trades, and then I'll have my max loss for the day. Every single trader should have a max loss of how much you're willing to lose for the day. Now, the beautiful thing is if you have 3 funded accounts and you're risking, like, let's say you risk like $500 to make the math easier, and you go 2 for 1 on the day, and you like, let's say you had a terrible day, you only won 1 winner and 2 losses. One account, let's say you had 2 R on the winner. One account is going to be up $1,000, while the other accounts are going to be minus 500. Like, this is why I'm not a big fan of putting them all together, because on a bad day, right, what happens is this: everyone always says, well, on a good day I could have made all this money, but no one ever wants to focus on the bad days. The reality is this: if you took if you're 1 for 2, right, and you had 2R on the winning trade, and then you lost 1R on the other trades, right? You're pretty much effectively break even if you combine all the accounts together. Versus in this situation, 2 accounts are in drawdown, but one has $1,000 in profit. That's the big benefit of this. Now, again, I'm not telling people what to do, but this is kind of like my philosophy on funded accounts until you get to a specific point. ES is already kind of like almost all those lows as well. So that's the thing. So now you want to be careful, like, because now ES kind of already took out that low, while NQ is respecting this low in here. So I would want to be a little bit careful, because sometimes what happens is it could form some sort of SMT, especially because it's pre-market. So again, look at how ES took out that low in here on the 5-minute, while NQ did not. Right, so that's kind of like a warning sign, especially if you want to short it down here. That's something that you got to be a little bit mindful of because of that SMT. Because whenever you're shorting near lows, especially when there's some sort of like something like this where there's a potential for an SMT, you really want to be careful on these types of plays. Yeah, anytime, bro. But yeah, guys, that's gonna be it for me. Again, I'm gonna come back into the charts around 10 a.m. So about like another hour or so. Gonna get some work done for other stuff. And if I see anything, as always, I'm going to post it inside the Telegram. But yeah, guys, appreciate you guys for hopping on. Hope everyone has a great trading day. And let's see if we can get some really good setups going into the 10 a.m. open. And yeah, I'll keep you guys updated if I see anything. And hopefully we get some good price action going into the New York Open.